Right now, Davide, I want to talk about the math of chronic. The negative yields have reached a new level of length on the x-axis. Do you worry about the chronic nature of negative interest rates?
Yes, I do. And I think the BIS just published a report yesterday and concurs with our view. And the reason is very simple, Tom. Think about it. How can you have inflation when in Europe, if you earn €100 and you stake it into the ECB, they give you 99.6? It's very hard on a nominal basis to understand how that can create inflation. And I think the fact that 70% of EU banking assets are in smaller banks, and they de facto bank 85% of the EU jobs. Smaller banks need a positive interest rate 0 to 3 years. That's where the banking profits are. And so I think having negative or zero rates is actually hampering growth. And if you consider on top the unemployment rate in Europe, it's close to its all-time low, about 7%. Last time when unemployment was at this level, rates in Europe were at plus 2.5%. As a result, I think it makes no sense to keep on cutting rates on the negative territory because you can't spur growth just out of nominal rates.
Willem?
Well, I mean, it also means that this low for longer environment also means that you can't be out of the market and miss your carry. I mean, we always have this conversation with clients who say, is this really enough, this 3% that I can have on my bond to be invested, especially if you then have a potential sell-off in the treasury market, etc., which we don't see, but, you know, that fear could clearly quite quickly wipe out your yields. But in a low for longer environment, you need to clip the coupon and the carry. And so that's why we're invested in 3 to 4 year bonds, investment grade, a little bit of high yield, and just sit on it until maturity. Try to do that trade.
But Willem, let me bring you back to my chart of the year. I mean, you know, Italy's 2-year yield below 0%. Why go into it if you don't have, I mean, 0%? Is it just be on a bet that the ECB would buy it back if something turns ugly?
So on the Eurozone, it's much more difficult than in the US market. We prefer the US market. You know, quite often people are also not hedged from a currency perspective. So that is an important variable as well to consider which markets you choose. But more opportunities in the US market, some opportunities in periphery as well, because you still get, nevertheless, some spread relative to the Bund and then on the credit market as well. So you need to pick and choose. And the opportunities are less. You need to be more active. You need to be a bond picker. Buying an ETF probably, you know, is not the right thing because also you then don't sit on a buy and hold position. You pick your maturities and pick the bonds.
Davide, what do these yields do to the left tail? I was talking to one of our interns yesterday about left tail risk, about the malleability, the dynamics of the system right now. When you have all these low yields, what does it do to the left tail?
Well, what it does, basically, it forces people, as we just heard, in taking undue risk. And you can see it right now in some of the yield that, you know, single B company are paying, even double B. And basically what it does, it forces investor to take undue risk. It also creates a further liability on the pension side, because today most pensions which have been funded are looking at a yield which cannot be reached. And as a result, what's going to happen in 10, 15 years' time, we will pay the price of having much lower level of pension the pensioner expect. And hence, in reality, we're lowering potential growth. And to me, short-term negative rates are a shock, like antibiotics. You can take it if you have a virus, you take it for 5 days, 2 weeks. But if you're on antibiotics for a year, you're not going to get any fitter. You're probably going to be more sick. And I think now what is needed is, in reality, in Europe, to use a bit of fiscal lever, because the fiscal lever right now can be used, in particularly given where growth is, and the fact that we need infrastructure, whether it's green, whether it's technology. There are many investments we can make with the current level of yields that are probably going to be value enhancing for citizens.